Hey guys, Mike here. So we got a lot to unpack in this video. Obviously, Jerome Powell spoke. The Fed put out their dot plot and everything, projections. As you can maybe see there, the market did not like what it heard, or more especially what it saw. So we're going to get into all that and unpack all that. I'm going to show you too, one thing key to watch out for. It isn't the stock market, okay? If you want to know if there's going to be a real pause, I'll show you what to watch out for on that one. Two, I'll show you the detriment, the damage that these higher rates are doing to companies and the real estate market. Oof, that data is horrible. And then some key levels you need to watch, because if you're wanting to sell off, I'll show you the level. And also, I'll show you what pushed Tesla up, because you'll notice everything was going red. Tesla all of a sudden got this huge pop up, and then it sold off. I'll show you what caused that, all right? Now, looking at the dot plot, you can see right here, guys, majority still see one rate hike. This little here, this is 2023, and then you go to 2024, 2025. But this is what we're paying attention to right now. That's what the market did not like to see. The majority of the Fed members said we might need one more rate hike, which you would think would be in November, of course, because there is no October meeting. And you can see the Fed's new dot plot. So again, holding higher for longer, maybe one more rate hike longer. As you can see, and as we talked about, I want to show you something here real quick, because I showed you how Microsoft and Google are making a killing with these higher rates. Let me show you what other companies aren't doing here. This is Dollar General. This is their stock price. You can see it's falling off a cliff. Look at what the interest expense has done for this company. It is up 95% since middle of 2022. Again, 95%, okay? And that's why you're seeing stocks like this and companies like this hurting. And of course, why are they feeling it and all the kind of stores just like this? Because their clientele is the ones being hit the most, feeling the most when it comes to inflation and these higher rates. All right, so that's why they're also getting absolutely hammered. But you know, what else is feeling it? The housing market. I mean, look at this. Housing starts are rolling over quickly as annualized level has fallen to the lowest since 2020. And if that chart right there don't do it for you, here's another visual to look at it. This is the same thing right there. That's a big drop off. It continues to decline. And of course, we all know why. We don't sit there and speculate. It's because higher prices ends up being, you know, the higher interest rates. But here's what is also happening. You got nationwide nearly 60,000 home purchase agreements were canceled in August. That is equal to almost 16% of homes that went under contract that month. And guys, if you get anything out of this, please hit that like button. It helps people find this video. And if you like the content, think about hitting that subscribe button down in the bottom. And now you have the Fed doing what today? Not signaling a pause, right? That's what the market was looking for. And then when he talked, he didn't really, I listened to him speak, same old, right? Nothing really new or everything. They even said they need to see more softening in the labor market as well. And so, and the thing you want to look for is, if it was a true pause, you would see bonds jump. You will see the bond market going, yay! You didn't see that today, did you? And so that's what you need to watch. Watch the bond market. Watch TLT, things like that, to see if you start to get it. Don't worry about the stock market. Stock market, remember, bond markets, you know, that's what they deal in is risk and debt and all that stuff. That's why they're called smart money. And when they say, oh, I think we're at a pause now, and you see bonds start to rally, TLT, stuff like that, start to rally, that's when you know a pause is most likely in, okay? And so keep that in mind. And so since they didn't signify that, and they're also saying, yeah, we're going to hold rates for longer. Again, this is nothing new. It's nothing we haven't heard before. Then, you know, obviously you're going to see the Dollar Generals and the Dollar Trees and the Five and Below, all those kind of, you know, companies and stuff. Their interest expenses are going to stay high. That's just the way it is. And, you know, we'll see how their stocks, if they finally bottom out or not. I know some people are talking about, hey, might as well start going long in them because they've been hammered so much, and that could be the case. You know, it's always good, I guess they say, buy stocks in the worst time. But so I guess you can just kind of take the information what you want, but just watch the bond market, okay, to signify whether there's a pause or not. Because when there's a pause, it's the power of the pause, what I call it at least, you will see a rally in bonds and other things. Just keep that in your breadbasket there. Now, when it comes to these indexes and stuff, whew, man, you know, you got SPY here. Obviously, you're looking 434 is the level. If this breaks, you can see kind of getting thin down here, right? And I mean, that means it comes down, test that trend line. If it breaks that, you end up going in this gap right here, which you already been in. And so, you know, the 200 is sitting around 420-ish, somewhere in there. And so, you know, just understand, if it gets down below 434, that's bad, right? And so Qs, you can see right now what's happening. You have this trend line right here, which has been in since around March, broke through it today. We'll see if this thing can recover by tomorrow. It was just in this range right here, but you can see, I mean, what has it been setting? Lower highs, right? And so when we look at the hourly, you can see, especially in power hour, because it bounced yesterday, right? Came back up, got in it, but then the last 30 minutes of the day, you saw a big push down in the market. So we'll see, if we end up getting a bounce tomorrow or a continuation. And IWM, I'll be honest with you, I don't know what keeps holding this up. It's crazy to me. This thing is below the 200, below the year-to-date anchor VWAP, and sitting in this volume gap right here. But it just something keeps holding it up, right? People just dip buyers keep coming in and buying and buying and buying. And so maybe this gets a bounce. I don't see how it doesn't drop another 2.5%, but let's just see. Now, Tesla, you saw this big pop. Everything was turning red. Tesla goes to this big pop, fills the gap to the penny. Again, the power of the gap fills, right? But what had happened was call buyers started flying in. So I told you, this is what pushes Tesla up. And you had significant call gamut, 275 and 280 strikes with a call wall at 300. When you look at this chart right here, I'm showing, I'm outlining the 300 call wall. All those lines, that is gamma and calls being bought and things like that. And it pushed it up to that point. And so now I can finally get rid of that gap. So we filled it to the penny before we got rejected. And of course, it was coming down. We're going, okay, got to hold this trend line, because when you pull out here, it's been in this channel since August 20th, right, roughly. And so it's just been bouncing there. And so it was holding up pretty good. But then once everything really started getting hit hard around 310, this thing just sold off like everything else. And we were trying to see, as I told the members, let's see, I literally put this in here and then it sold off right after this. And so, as many times we've bounced off the top part of the channel, the bottom part of the channel, didn't matter, couldn't hold at the end of the day right here. Ended up coming down. You wanted to hold like 266, 70 is really what I was looking for right there, to see if you finally get the bounce up for tomorrow to lead into the rest of the week. But nah, came down, bounced, tried to retest, and then fell right through. So we'll have to see tomorrow if it picks up, or do we start heading back down to that gap below, which is not far from, as you can see right there. And so we'll see if we end up finally filling this thing up before heading higher or heading lower. Hey, we'll have to see. And then we move on to Google. You can see we talked about this rising wedge right here, right? And how it's been, obviously just setting up for a sell-off. Were they coming for it? And the answer was absolutely yes. You saw the big red candle. And the reason why it's not shocking, because when you look at how Google normally trades, this is a normal Google, right? Up 15% down, up 18%, then going down, up 20% down. And then 2020 hit, and you got this crazy run up. And then, here comes the AI bubble and all this good stuff. And so when you look at what it's up now, I mean, it's had such a large move. And then, yes, it's absolutely, as they've done with every mega cap stop, they've ran these things up. And this was up like 58% just since March. And so, what do they normally do? They run them up and they rotate out into something else. And so, especially with this being at the top of that channel right there, it makes perfect sense to at least come back down and tag that 50. And you can see this is another one. I had to go back and pull this in, because right there in the last 30 minutes, big sell-off coming down to the bottom of the channel towards that gap. You can see the RSI is oversold. MACD below the zero line now. So we'll see if this one, you're seeing a lot of this on charts, by the way, on the hourly, being pushed into oversold. So we'll see if we get just a technical bounce tomorrow, relief rally or whatever, or it wants to continue to push this down to the bottom of this channel. So pay attention to what's green tomorrow. When you pull up the 50, you can see right there it's going to be probably up near that gap, up near the bottom of that channel. So we'll see how this plays out. Now, when you go to BABA, simple, this one's just in trouble, right? I mean, China, like I told the members this morning in the morning news brief, they swear they're going to try to do more stimulus package, more things to help out and everything. But this one can't, and it is consolidating kind of right there the last 3 days. But it's below that ascending line right there. The RSI was like crap. The MACD looks terrible. And so we'll see if it can finally catch a bid again. It's not going to be on its fundamentals. It literally just has to be something China has to do, right? Or economic data hasn't looked better. Now, Netflix already talked about this one right here. It's been getting hammered like it stole something. It continues to get hammered. It continues to head down to that trend line right there. And until we break that, I don't see why anybody would freak out. But if it does, that's when you'll really see a fall. But that would be a perfect place for a bounce if it actually gets there. NVDA, you can see this one right here, is right at the bottom of that channel we talked about yesterday. And what's happening now? It's starting to try to break through, peak down below the bottom of that trend line right there. But you can see, like I talked about the hourly, oversold, right? RSI down there. You can see, again, do we get the bounce to March or relief rally? That's the better question. A lot of people are predicting more push down and, a little more selling off and stuff. And that will put it down between anywhere from, 395 to 411, somewhere in there, before you really hit some good support. Now, Palantir, let's see which one of these plays out, or if any one of them plays out, right? You got a head and shoulders pattern. You can see where the target is. You got a bearish pennant. You can see where the target is, right? So, put in the comments what you think is going to happen on this one. Again, it's done a great job somehow. I mean, it has a loyal following of the dip buyers just buying up at this level, just holding that $15 level and stuff. So let's see if this one finally breaks or not. Now, earnings, the only thing I care about is Darden, because Darden owns a bunch of restaurants. This is going to tell us a lot about the consumer and whether or not they continue to push these prices up and raise prices. That's the only way they've been making money, is by doing that, not by volume. And I'll talk about that in just a second. And then economic news, there is economic news, going to absolutely move the markets. Remember, jobs data is coming out. The Fed wants it softened up. Okay, we'll get that. You get a lot of Philadelphia manufacturing and business news coming out as well. And then we'll get existing home sales month over month. And I'm expecting a drop, is what you would think, right? After seeing the other data come out on home sales and stuff, especially in existing home sales. Who's selling? You selling? I know I'm not selling. I'm not getting out of this rate. But when it comes to talking about Darden's, I'm trying to think of the name of the company this morning. I can't remember. I put it in the morning news brief and stuff. But even they were saying this, they reported good earnings, but the only reason they got the earnings and the growth, they say they just keep raising prices, but volume is down, right? Volume had just continue to decrease, but they continue to pass on those higher prices to the loyal customers that keep coming and stuff. And so, and I still notice in restaurants when we go out, I'm like, good, and what is this right here? What this used to cost us and what's it's costing us now? It's kind of crazy. So, and I know people that don't eat out as much anymore, and I don't think we eat out as much more, to be honest with you, but because you're just getting ripped off. Look at what you're paying now for the same food versus what you were paying, 2 years ago or a year and a half, somewhere in there. It's nuts. And so, we'll get to hear that from them, because we've heard other people saying, look, the consumer is still strong, but that's because they're running up credit cards, but there's a certain faction of the country that's not. Okay, you like I said, you can listen to the Dollar Generals, the Dollar Trees, the Five and Belows, those kind of stores. It's not a good environment for them or their customer base. So, we'll have to see how this plays out. Like I said before, I don't know where we're going from here, because the fourth quarter will be positive. We'll see if it goes up. I'm not going to be surprised at all if we go up to all-time new highs by the end of the year or whatever. But again, I will always look back on this time, no matter what year it is, and be shocked that the economy has held up as well as it has. But again, it's because all the money they put out there. And so that's really all it is. All the money they put out there and all the money we can earn on the money now and all that good stuff. So, and all the housing prices going through the roof, and you're just sitting on all this equity and stuff. But it's amazing that nothing's broken so far. I'm just, again, watch the bond market like a hawk. That's what you want to watch. All right, for a couple of different things. One is to signify a pause. The other one is to make sure it's holding up, because that's how we all function here, okay? And I totally forgot to put that chart in this video today. While I'm thinking, I promise I'll put it in tomorrow's video, and it compares us to the EU and stuff and how we finance everything. So anyway, hope you guys got something out of it. Hit the like and subscribe button if you did. I always appreciate you guys watching, and I will see you tomorrow.